In this video, I want to show you guys step by step how I lost over $440 trading USD CAD. Okay, because I think it's very important for us as traders to be open and honest about our losing trades. Okay, so let's break this down step by step for you guys. So number one of the strategy rules here is our higher time frame break of structure. And in this context, our higher time frame is the 5-minute time frame. Okay, so let's move this down here so you can get a clear picture. So clearly, we've broke structure to the upside, which indicates strong bullish momentum. We can mark this on as a BOS to the upside. Okay, and the reason why this is strong, this is indicated by the 3 bullish candles showing clear bullish momentum to the upside. Okay, so we can mark on our break of structure. That's number one, which is our higher time frame break of structure and our higher time frame bias. We can then go ahead and mark on our guarded low. So our guarded low is our invalidation level, of which where we do not want to see price close below, this will invalidate our trade. So for example, if price comes and closes below here, below our guarded low, I would not be interested in longs anymore on this trade. Okay, and number two is our POI or point of interest. So we can mark on our POI, which is our last down candle before the strong move to the upside. So we can mark that on, and this down candle here is our order block. Okay, so this is our order block. Mark that on from the open down to our guarded low. This is this zone here, this blue area is our point of interest. So if and only if price comes back into our extreme demand here, then we can look at taking a long trade. Okay, so that's number 1 and 2. Higher time frame break of structure. Number 2, point of interest. Number 3 is our lower time frame entry schematic. So we're looking for price to come into our extreme demand. Then we're looking for the entry schematic on the lower time frame, and then we can look to enter a long trade. So let's drop this down to the lower time frame here, which in this example would be the 1-minute time frame. So the higher time frame is the 5 minutes, the lower time frame is the 1 minute, and let's play this on. Okay, so let's mark this on in terms of structure for you guys so we can get a very clear example of what we're looking at. So we have a low, we have a lower high, followed by a clear lower low in the market. We're looking for a strong shift out of this area, and therefore our entry will start to materialize. Okay, so you can see here, let's play this back one more candle. So we have a lower low, lower high, followed by another lower low in price. We're then looking for a break of structure to the upside, which is here, a strong break of structure, which is what we get. So we can mark this on as a BOS to the upside, BOS here. And we've also ran the stops here. We've ran this liquidity of any buyers that were looking to get into this market too early. So we can mark this on as a run on liquidity, and that's marked with this X here. Okay, so this X here, we've run these stops, and just to simplify this, the entry schematic is when this is on the lower time frame, we have a low, followed by a lower high, followed by a lower low, followed by a break of structure, a strong break of structure. We can then look to enter on a 50% retracement of this down leg, and then we can look to target equal highs and then for some more continuation. So that's the entry schematic there, where we've ran these stops here to the downside. Let's mark this on, make it nice and clear. So we've run these stops to the downside here. This is a run on liquidity, and then we're looking for that shift here on the lower time frame, entry 50% of that down leg, and then we can look for the continuation. Okay, so that's the entry schematic. That's exactly what we have here. We have a low, lower high, lower low, shift. So we're looking for an entry on 50% retracement of that down leg there. And then we're looking for a continuation to the upside, We've got a stop loss below here at 3 pips. Give it a little bit of room to breathe. Targets. First TP would be equal highs here, and then we'd be looking for a run on liquidity to the upside here, reaching for all of that liquidity above the equal highs. So liquidity, mark that on there. First target would be a 3.2 risk to reward, and then ultimately we would be looking to reach for the liquidity above all of these, above that high there. Okay, so ultimately you can see we sort of messed around a little bit. Price went around a 0.8 risk to reward, which wasn't enough to move our stops to break even. Okay, and price ultimately ended up stopping us out. Okay, price stopped us out and then also melted to the downside. So one thing that I want to point out here as well is this is why we have our invalidation levels. We have our guarded low, because if price does start to close below here, we're literally going to melt to the downside. And you can see that's exactly what happens here. Therefore, we do not want to be in this trade if, you know, our invalidation level is broken. And that's why I want to take a small loss on the trade rather than allowing this trade to run out, and you would end up taking, you know, a huge loss here. You know, so it's all about managing risk. It's all about cutting your losses early and maximizing the upside potential. Okay, so this is how I lost over $440 on USD CAD, following my strategy to the T. Okay, as I said, we've got around an 80% win rate, but it is, you know, it's interesting to note that you're gonna take losing trades. This is all part of the, you know, the trading journey. It's all part of the process. So be open and honest about your losing trades. Okay, if you guys did like this video, please, you know, like, comment, and subscribe, and I will see you guys in the next one. Take care, guys.